For now, let's invite our market master, Krishna Kumar Karwa, the MD of Emkay Global Financial Services, is with us. Krishna, hi, good morning, and thanks for being with us. Once again, all that talk about the possibility of LTCG, but tomorrow, if the government announces just a change in the duration, the holding period from, say, 1 to 2 or 1 to 3 years, do you think that would be taken well by the street, or do you expect jitters even if such a change comes through?
Good morning, Sonia. See, first of all, I think let's look at the context in what we are talking about, this long-term capital gains tax. If you look at it today, STT itself, the government is on a steady basis able to raise almost 7,000 to 8,000 crores of revenue every year, and it has been on a very steady basis and very cleanly executed. Versus that long-term capital gains tax, it all depends on how the markets behave, etc., and what kind of quantum the government will be able to raise. Even if they impose, I think it's very difficult for the government to be able to predict that. And obviously, you require a buoyant capital market if you wish to go ahead with your divestment program in the coming years also. And I believe in the coming budget also, the divestment target should be around 1 lakh crores. So all these factors together, first of all, make me believe, we believe that at least that all this talks about long-term capital gains tax being imposed, or this period from 1 year to 2 year, etc. Possibly every year, the last 2-3 years, we have been seeing that before the budget, these kind of talks come about. And I think government is pragmatic enough to understand the implications of such moves and would not impose such kind of moves.
Okay.
And let's for a moment assume that they even impose long-term capital gains tax, or they increase the period from 1 year to 2 years. Now, investors come to the market, invest in the markets because they believe that over a period of time they would be able to, there would be decent appreciation in their portfolios, etc. Now, if they have to pay tax, they have to pay tax. So there could be a knee-jerk reaction for 2, 3, 4 days. Beyond that, I think it all boils down to underlying fundamental valuations, and life will go on. So to summarize, my take is that we don't believe that this kind of a long-term capital gains tax or a change in period, etc., should happen. And even if it happens, investors will take it into their stride. That's not, you don't come to the markets just because there is no tax on long-term capital gains tax. Long-term capital gain. Sure. If it is there, it is there. That's it.
Okay. Krishna, good morning. So, let's talk about the other issues. Do you think we are getting some kind of a sense of correction after a long time, especially looking at the global markets, or do you think once again it could be one of those shallow moves and the market moves on?
You see, the way you have to look at it is that in terms of the mid-cap, small-cap market, on a broad basis in the last 12 to 13 months, the returns on an index basis has been around 70 to 80%. And individual stocks probably have given you maybe 3-baggers, 4-baggers, etc. So it's natural for investors to be taking some money off the table. And if you look at all the valuations vis-a-vis the underlying fundamentals, in some pockets there could be maybe some froth is getting built up, or the valuations are stretched, and that's why you see some kind of a profit taking which is coming about. And as far as the large cap indices are concerned, we have had a 30% kind of a return in the last calendar year, and this month also we have had almost a 4% return. If you look at it, the large cap index, last year you had the domestic investors putting in great amount of money, and versus that the FIIs were relatively muted. But in the current month, if you see, I think the emerging market flows itself have been very strong, and we have also got a share of that, and which is reflected in the big move which has happened in Nifty itself by almost 5-6%. So my sense is that there could be parts of the market where you could see corrections, and maybe the large caps could relatively outperform for some time. But are we looking at, so we will this year, it looks like, be more a part of the global flows versus last year, which was a function of the domestic flows.
Okay. Good morning, Mr. Karwa. Just a word more on the budget. If LTCG is not something you're really worrying about, what else would you worry? Is there any worry about the fiscal deficit? Just how will you coast through tomorrow?
My sense is, we believe that the budget is obviously basically going to be an extension of all the policies which the government has been announcing and implementing over the last 2-3 years. So the focus obviously will be on rural India, on agriculture, on jobs, on affordable housing, on infrastructure. These are the stated areas where there has been a thrust from the government to revive the whole economy, or areas where there have been deficiencies. And again, that will be in the budget will also be a statement, or rather the allocations will again be focused on that. So it's going to be a balanced budget. The government is very pragmatic in terms of the fiscal, maintaining the fiscal deficit, etc. So I don't think so. I mean, at the end of the day, it's an estimate. So the numbers will be very stable in terms of the fiscal deficit. Also, that's the sense we have, and that's where I said earlier also that the divestment target would be an important part of the whole whole estimates. So we believe that it should be a balanced, pragmatic budget. And after GST having been implemented, there are not too many tools in the hands of the government as far as the budget is concerned to be able to give any stimulus, etc. So maybe whatever stimuluses they have to give have to be more on the spending side, and more on maybe on the direct taxes. There could be some incentives, etc., given to the middle class, etc. That could possibly be there. So it should be a pragmatic, balanced budget.
Okay, well, for now, the market has moved into the green quite successfully. In fact, it's a dramatic U-turn that we've seen from the morning levels, even across Asian markets. The Dow futures, by the way, is up about 100 odd points. It's early trends just yet, but all Asian markets have now moved into the green. The Hang Seng is now up almost 150 points. So, turn of events.
You know, anecdotally, you go into Fed events with long position. That was the point I made this morning as well, Sonia, because, you know, what you do is 2 days before the event, you want to arm twist Fed into saying that, you know, things could get really bad, financial markets, and 2 days back-to-back collapse in Dow. It's rare to see third day running that would happen. And you have to respect the market's view that over the last 10 times you've gone into the Fed event with long positions, you have made money. So that's why the day is still long. Let's see. But for now, I think the message is clear that, you know, you clearly want to go into the event at least with long
Or
positions.
it could be that the State of the Union speech didn't have anything negative. So maybe there is something that that has turned a happy turn of events.
Also, you know, a lot of stocks,
Asia.
exactly, and a lot of stocks are now making highs of the day. You know, I was talking about, for example, you know, tire stocks and Balkrishna Industries in particular. That stock has made the high of the morning. So clearly, there's a bit of a, you know, buying flavor.
The advancers are more than the gain, the decliners. We haven't seen that in some time in the last 48 hours. So perhaps clearly at the moment the mood is turning for the better. Mr. Karwa, how have you looked at basically earnings and valuations from the earnings season so far? Are you comfortable buying at current levels?
See, broadly, if you look at the results so far announced and versus analyst estimates, there have not been too many sectors or stocks where there has been disappointments. So to that extent, the earnings season has panned out as per expectations in most of the stocks and sectors that we cover as such. But the question is that do the valuation or do the earning itself justify the valuations? There is a question mark on, and that is what we are possibly seeing, is that companies are announcing, at least in the mid-market segment, the results are coming as per expectations, but post good results, the stocks are possibly staying flat or maybe even correcting. So I think the market has possibly discounted improved earnings in many of the sectors. That is the trend that at least we are seeing. And it's a very good, I would say it's very good also that the small cap, mid cap segment is not running away, and rather there is a correction which is happening. So which is good. There should be some price correction and there should be some time correction.
Okay, all right. Mr. Karwa, we'll let you go on that note. Thank you so much for stopping by and speaking to us about the budget. That's Godrej Consumer.